start the recording. Yeah, so AUD Chef is a long position that I have. So, I just want to double check I'm sharing the right screen. Yeah. So I had this movement. I honestly did not delete at that point. I wouldn't really say I forgot. I was honestly just not managing orders because I didn't trade yesterday. So kind of left some inducement there. Price came into play, and this disgusting price action has formed ever since. So I'm just kind of waiting on this one. AUD CAD I had, it was this break-even scenario. Price tapped in, had a pretty good reaction, and fell through. NZD Chef, similar kind of scenario. It was a long position, tapped in, got me to break even, and then fell through again. And then Euro AUD was a loss here. We had these two equal highs kind of formed before the entry. Price came up and in. Also very disgusting, similar to AUD Chef. That's kind of what I've had recently. And then I've had CAD JPY loss, Pound NZD, and Pound JPY. These three in a row were all winners, which kind of skyrocketed my equity curve. Having three winners in a row like that, it looks ridiculous now. But yeah, I'm expecting probably some slower period now. Usually with three winners in a row, I would expect some slower period just based on the probability. But yeah, overall not bad for this month in general. I've taken, what is this, 10 trades this month so far. And then, like I said, I will be going away next week, so this will probably be it for me for May. I come back on, let me check. I come back on the 29th, so just about done with May for me here. I'm going to be away that whole week in New York. But yeah, nothing that I'm really setting either for that reason too. I don't want to set any pending orders and then go away and be kind of stuck managing them or whatever, or not being able to manage them. My PC will be off for the week, save it some battery life here because I never turn it off. But other than that, I wanted to talk about, I was going to touch a little bit upon a real estate conversation I had in chat because I had a bunch of people message me after that and ask questions. When should they start? How much do they need? And a lot of stuff like that. So I might dive a little bit into that. And then I will go over your data review today from 2020 to 2024. I think you mentioned, I'm not sure how much trades. I know you said the first 300 I looked at, which of course I remember in the past data reviews here. But how many total is it in this? Actually, you know what? I'll pop it open just to get a head start on it for later. Let's see what we got here. Table editing. Yeah, equity curve looks great here. So it looks like, oh wow, 1,292 trades. This looks fantastic to me. We're, like I said, we'll dive into this a little bit after. But that is some crazy great data, a lot of repetitions too. So hopefully that's, you're seeing that carry over mentally into your live trading because that's ridiculously good set of data there. But I did want to talk a little bit about this piece here. This was, now that I'm looking at it, this was supposed to say real estate. But I was talking a little bit with, I know Simon has asked a lot about different real estate topics, and I know he watches these recordings of the webinar. I got a bunch of DMs yesterday asking me a lot about real estate questions, kind of what we were talking about. So one thing to keep in mind here that, is kind of interesting that I didn't know, and I'd be interested if anybody in chat wants to share as well, but our typical standard way of purchasing a property here in the States is you have the price of the property, you put about 20% down, and then you take out a loan for the remainder for 30 years. It's called a mortgage. There's 15 years and 30 years. There's all sorts of different structures you can do. But the standard is 20% down. And I'm curious if that is, for you guys as well. I know he is from, I believe, Bulgaria. No, not Bulgaria. He is from, I know, Eastern Europe. I forget exactly where at the moment, but there he might be actually. But all I know is 20% down is fairly standard in the States, and it seems like it is there as well. Tommy mentioned that also it's kind of similar, but they have 100% mortgage, which is something the US does not have, unless it's like a veteran. We have like a VA loan. But so what's interest rates in the States? Let's look up the real time. I'm interested in right now. 30-year fix looks like 6.96 right now in the States, but that's mortgage interest rate. So 6.96, pretty solid. The 20% that I'm referring to is the down payment. So the average house price where I live is about 565,000, which is, yes, very expensive. But 20% down is the standard. So you typically should be putting a little over 100 grand down for your down payment, and then you'll be able to take a mortgage on the rest. Obviously, if you can't afford that, you have to do a less expensive property or a less expensive area. But that's why traditionally, when you talk about it in the buy and hold perspective, it is a very difficult asset class to get into. There's obviously a lot of other methods. Now, one of them that I spoke about, well, we'll get into the basics here, I guess. I'll show you kind of this math, because I got some questions about it. But if you had 20,000 to invest, for example, when you put that 20,000 into the stock market, few things to kind of understand. Number one, the stock market, I always recommend having a base before moving into another asset class like real estate. But when you invest 20 grand, you now have $20,000 in stocks. That's just how it works. So for example, if you take 20,000 and you invest it all into the S&P 500, you now own $20,000 worth of the S&P 500. And as that grows, you obviously gain your capital on top of that base of 20K. So for example, if the S&P 500 goes up at 10%, which is an average, historical average for it actually is about 8 to 12% per year. I'll go a little slower here. I know I'm talking fast. I tend to do so. But your asset or your 20,000 in stock has now grown from 20,000 to 22,000 because it has grown by 10% on top of that. So you have technically profited $2,000, which your overall rate of return here is about 10%. Your return on investment is ROI, and it's about 10%. And why? Because 2,000 is 10% of 20K. The reason I wanted to show this comparative to real estate, and especially kind of mentioning that 20% down payment idea, is if you invest $20,000 into real estate, you can own an asset of 100,000, and that's because what we talked about regarding that 20% down payment. So if I want a $100,000 house, I don't just pay it outright in cash, 100,000. You can if you want, I guess, but the majority of people are putting 20% of that property value down, being 20,000, which is the same value we talk about here. And just assuming in this year, for this example, stocks and real estate grew at the same exact percent. If that property of 100,000 grows at 10% that year, the property that you now bought is worth 110,000 because obviously 100K grows by 10% in a year. It's now worth 110,000, but your profit in that scenario is $10,000 in that asset class, but you only invested 20K, the same as the initial scenario, which means you profited an ROI of about 50% instead of 10%. Technically speaking, this is called leverage. This is what it is at the end of the day, but that 20% that you put down gave you access to an $100,000 asset, comparative to the stock market where 20,000 gets you 20,000. The only reason I wanted to mention that difference is I got a lot of questions about how people make money in real estate. And fundamentally, this is like, beginner 101 on how money is made, technically, because there's leverage involved here. There's so many other avenues, though, of real estate that kind of extrapolate on this general idea that make it even more insane in a sense. And I guess one point is this is if you bought a property, you did absolutely nothing with it and held it for the year. And obviously 10% is a bit high. 10% is also high for a single year in the stock market. It's just kind of an example for easy numbers. But now you can kind of get into the nitty gritty of it. What if you purchase this property for 20K, but you rented it out to a tenant for, call it, for a $100,000 property, you could probably get, call it $900 to $1,000 a month. We'll make it 1,000 for easy numbers. But now at the end of the year, not only did you make that $10,000 increase on the property value, but you rented it out for $1,000 a month for 12 months of the year, netting another 12 grand on top of this value, which obviously increases your ROI significantly more. And keep in mind, there's expenses involved with this. There's other stuff. I'm just trying to make it as simple as possible. So, let's say you make $1,000 a month in rent and your expenses are 500, you net 500 from that, times 12 is 6,000 a year. I'm just trying to show you that there's other avenues on top of just that simple appreciation. Because on top of appreciation and on top of rental income, there's also depreciation, which is something that a property allows you to write off against your taxes. So in my real estate business, this is something I do very, very commonly. I can take a property and depreciation every year is a credit, or sorry, a deductible that I can take off of my taxable income at the end of each year. And the more properties you own, the more it multiplies, and you can increase that depreciation year over year. Um, which is, another tax benefit on top of the added income, on top of the leverage that you already have. Um, and another good example, because I get this question a lot, um, when you are renting out a property like this, for example, you still have to pay the mortgage. And the overall goal here should be that the rent income that you can generate from the property covers that of the mortgage. So I mentioned you make $1,000 a month, for example, from this property. Let's say your mortgage is, I can't do the math right now, but let's just call it 600. You take the 1,000, you pay the 600, and you are now cash flowing with this property $400 a month. This is kind of how it might look. Obviously, super round numbers and just random estimates to make it easy. But that's the general idea of how people not only make cash flow from real estate, but also leverage that appreciation that we talked about here with that $10,000 increase while only putting down $20,000. Now, one of the more common questions that I received after sending this in DMs a lot was, number one, how much does it take to get started? This is very dependent on area. As I mentioned, I live in a really high income area, so 565,000 is our average property price, which, even to get a down payment on that, you're looking at about 120 something thousand dollars. For others who, can't afford that, you can easily start in property with 10,000. For some of you in, a lot of European countries are where people I got that question from. I looked it up, and there's a lot of properties you can get, for example, similar kind of loan style with that 20% down. And you could put $10,000 down and leverage a $50,000 condo, for example. I know people here that I work with in real estate that started from trailer parks. And they started with a simple trailer and they put $2,000 down, took that trailer, made the income from it, flipped it, and then put $20,000 down on a small property, did the same thing, and just kind of scaled up that way. So it is a scaling process, but you can start with, I would like to say, any dollar amount in real estate, but there's stipulations to it. One of them being, if you want to start in real estate and you're going to do it that hustle and scale way I'm mentioning, you got to keep in mind that you're now creating almost a job out of it. That's a lot of time. It's not something like the stock market where I click a few buttons on my broker once a month and I'm in and out. So that passiveness is kind of gone if you jump into that real estate route. So what I always recommend, and what many of my financial advisors used to recommend, and even financial advisors I just speak with and kind of talk and share ideas with, they say that you should have roughly a base of $100,000 in the stock market before you care to go and diversify into other investments. And I say investments because, yes, it's very likely that before you get $100,000 in the stock market, you might already have a primary residence. That's not necessarily an investment. It's obviously you need a place to live. It's different. But if you're looking for an investment property, the majority of the time, I would even recommend having a much larger base in something simple, something passive like the stock market, and then kind of go and shift into real estate or some other form of income that is slightly more active. Um, Another question I got was regarding how active is real estate. Now, this is a huge, huge span. So what I do is I have an actual business from the income side of things. So what my business does is mainly acquisitions, meaning I reach out to a lot of homeowners, and well, me specifically, and I have a few callers that kind of work for me, but cold calling, reaching out to homeowners, making offers on the property, and essentially finding a deal at the end of the day for a distressed property. These are homeowners who For example, one of my more recent deals last week was a pre-foreclosure. The gentleman was going into pre-foreclosure. He couldn't afford his property anymore. And instead of having to go and get a default on the property, get hit with a huge credit burden, he was able to have us come in and we bought the property in cash. And then we actually ended up assigning that to a buyer and making an income from that. So it's a little bit different. But that's kind of just, I throw this example out there because my real estate business was started with $3,000. Very small income at the end of the day. $3,000 to make, kind of what I've scaled it into is why I always recommend businesses as something that if you have a lick of interest in longer term generating income for yourself, I always recommend a business along something like trading, the stock market, and real estate, and just expanding your avenues there. Because at the end of the day, what that business has allowed me to do is take my $3,000, scale it up into the business I have now, and kind of take that capital and reinvest it and reallocate it into my personal trading account, my stock market portfolios, more property and real estate in the long-term investment sense, and just kind of go from there and, increase my overall income to then increase my assets as a whole and kind of, I forget the term here. I don't want to butcher it, but in general, just making income that can kind of expand into other asset classes and grow your wealth as a whole, as opposed to only relying on my trading account, which before real estate was small and kind of had to scale up through prop firms. So I used a lot of prop firms, took that capital, put it back into my personal account. But obviously, it's a lot slower than having another income generating business on the side of that, and putting that money into the personal account. But I'm just kind of, ranting a little bit about this because I want to give people, or at least plant a seed for some people, because I get a lot of questions regarding real estate, investing, and things outside of just what we teach here, which is just general trading in the markets and generating an income through firms. I get a lot of questions about like, hey, I'm looking to take the next step. We have a lot of funded members here who are starting to begin their journey of making money through firms and starting to increase their income. And they ask me, what should I do next? What do I do with my money for the biggest return? What different things should I buy? Stock market, real estate, things like that. And I'm just trying to plant the seed and give you an idea of like what I personally did to kind of, I guess, get the ball rolling and really, really scale to a different point. I started my real estate business at 20 years old. I'm 23 now, so it's been about 4 years when I started it and kind of how I've been working on it. And I also mention that because I think long-term view, asking yourself, is there a business that you could see yourself starting today, really hustling and grinding for that you want to be doing in 5, 10, 15 years? I'd love to still be in real estate and still scaling my business in 20 years. And it's just kind of something I'm throwing out there as an idea, not just real estate, but in general, for those of you that have that entrepreneurial mindset to expand your avenues as well and allow yourself to kind of expand on multiple different niches and diversify really well because it will do a lot better for you. And it's just something that I get asked so much about being in a trading server. At the end of the day, we teach trading, people are getting funded, and they're getting funded and increasing their income and suddenly asking themselves, okay, now what? And I think it's part of the importance of a community is having people to talk to and be like, okay, like I'm funded, I'm making money trading, or hey, even if you're not making money trading, what can I do to increase my capital elsewhere to have more money for prop firm evaluations, for my personal trading account, kind of just expanding and immersing yourself in that general goal of wealth, which I'm assuming is what most of you got brought to trading by, is that overall, want for wealth. And just being able, number one, ask me any questions you guys want. I don't mind sharing kind of what I did, my story, my steps that I took. But also just being more open to asking in chat even and like kind of talking back and forth with people because I know I got a lot of DMs after sending this, and I'm sure there's plenty other people who have the same type of questions in chat. That's why I wanted to kind of spit this out there and throw it out there so people could hear it. But yeah, I do think we can go over some of the data reviews now. I will start with, well, we have Sugar today. We don't have any other. I think the last one was a while ago. No one has submit data, which I guess could be seen as a good and bad thing. It's either people stop testing or they're getting more comfortable in their testing. But we will take a look at this Excel sheet here with a ridiculous amount of trades and data. I'm going to swoop this over here so I can make sure I'm following chat as well. What is your business or prop firm? So I don't own a prop firm. I actually don't trade with any prop firms anymore because I am from the US and the majority of them cut ties with us. So FTMO no longer can trade for them. My real estate business is Blaisdell Properties LLC. I'm not a very fancy business namer if you can't tell. But yeah, my real estate company is just Blaisdell Properties LLC. So nothing too special there. But yeah, that's basically the domain I operate under. And yeah, I mean, it's something that I've kind of scaled throughout time. And, at this point, I'm using that capital to then put it into a bunch of other places. And I think it's just it's like fuel to a fire at the end of the day. I already had the interest in the stock market, in trading. I already was profitable by the time I started making more and more money in real estate. So it allowed me to take that money and put it into my personal trading account, which is huge. Compared to when I was a little bit younger, a little bit more naive in the trading space, even before I was making money on prop firms, my general idea of trading, and I'm sure many of you may relate to this, was I was told I can come into trading and learn how to do it and then start flipping $100 into $1 million. And that was like, the dream that everybody kind of sold on social media was, yeah, start with $100, flip it to $1 million. And you'll get there, and that's how you achieve financial freedom. And obviously, as time went on, I began to realize, okay, this is not realistic. You have to extremely over leverage to do something like that and be very risky with the way you trade. And it's just not the truth behind it. At the end of the day, you need money to make significantly more money in trading. That's why prop firms are a great option nowadays, because they let you leverage that capital and then taking that prop firm payouts or prop firm money that you're making and start funneling that into a personal account that's your own real money. That way you're not reliant on a firm that can go under or deny to pay you, etc. All sorts of issues that can go on there. And then, of course, if you do have some sort of interest in business on the side, maybe think about, do I have the time? Do I have the idea to start one? Work on something for the next 2 to 3 years and really be at a point where 3 years down the line, you might look back and realize now that you started, you have capital to go and put it away into a personal account and more into the stock market and maybe go buy some property if that's something you're interested in. And kind of just increasing your overall bottom line income is, at our age, especially for those of you that are younger, on the younger side like me, it is one of the most important things is just getting that income line increased, keeping your savings rate very high, not spending a lot. Obviously, when you are young, you have less responsibilities to spend on. So you're able to keep more of the money that you're making, increase your income, and then go and delegate that towards assets and smart money decisions that are actually going to push you further. Don't fall for the sports cars, the Lambos, the nice things, the material items. Hold off on that stuff. And then, of course, as time goes on, you can enjoy your money more and more. But, it's that fundamental idea and a lot of discipline that is required to get to a point like that. But I think it's so, so important because nowadays, I know a lot of people I work with in real estate and even people I met in trading. There's someone I met in trading who's making a lot of money with FTMO and my Forex funds. And he moved to, I want to say, Ontario from Toronto, or he might have moved from Toronto to Ontario, vice versa, if I mix that up. But he moved there, bought a nice apartment, bought a nice car, bought another nice car, was doing really well in trading. And then a few years later, my Forex funds goes under. He loses access to that, no longer has majority of his income stream, and just kind of shoots himself in the foot because, he didn't allow himself to have that discipline, save that money, invest it properly, really keep his savings rate high and his expenses low. So that type of stuff I just like to go over because it's so, so important. Some people didn't get to hear that. I didn't really get to hear that. Obviously I kind of made my decisions and I did well, but it was based on surrounding myself with other people that are in the place I want to be and being able to, ask them these questions and stuff, because at the end of the day, it's stuff like this that nobody wants to tell you. Everybody's willing to show off their Rolex and their Lamborghini, but they're not willing to tell you, the steps or the the stuff they might have had to do to get there. 55% win rate here. This is fantastic. That is a break-even win rate, 30.1% without, which is really, really good here. The equity curve speaks for itself. Some deep drawdown periods in here, which I'm kind of glad are included, to be honest, because it shows that longer term span. I really, really like this set of data just without even going too deep into it. Like, I think everything looks great here. With a break-even rule, you're only losing capital on about 45% of your trades, which is really good as well. And obviously, you know, hats off to you. 1,300 total trades. Like, you're clearly putting in the work and getting comfortable with that strategy to the point where, you know, you should be able to go into a live market and mentally really keep that trust and that fortitude in what you've built here, because this is an extremely long sheet of data and it looks fantastic to me. So 92% gain over the course of, I believe it was 4 years or 5 years, 2020 to 2024, it looks like. Yep, and then on majority of pairs here as well. So yeah, 94% gain in 4 years. Divide that by, or sorry, 92% gain in 4 years divided by 4. What does that bring you to? It's like 22.5, somewhere around that range, general range, 23 maybe, which is, you know, really, really good returns, just short of 100 there in 4 years, which this looks great to me. I mean, there's nothing that stands out to me. We'll take a look at some of the trades just for those who are in the call that maybe want to get an idea of what kind of trades he took to achieve this data. But yeah, we'll take a look at some of these here. Let me pull it over to a different tab. And I'll pull up a few just so we can kind of, you know, get an idea. I like these chart colors. These actually look like my old ones. I used to have one very similar. I cannot stand the ads anymore. I'm about to upgrade back to TradingView. I found myself not, yeah, I know I already went through the first 400 here. I kind of, honestly, I went through a bunch over the last few weeks. I can scroll down if you'd like. I know we've probably seen some of the ones I've already looked at. I'm going to actually start from the bottom. Wow, 1,292. So, take a look at some of these here. Chart colors changed. I no longer like them, but that's okay. Well, as long as the trades look good to me. This trade here looks great. I think I actually took this one. Maybe I took something similar to that one. Also looks pretty good to me. This one's definitely a little bit odd compared to what I would take, but, you know, I think that's the advantage of having this backtesting sheet is you can trust your gut now. Because obviously I'm not always right. I have a style, you have a style, and clearly they both work very well. You can see the data here to prove it. I think I took this trade as well, now that I think about it. This must be, yeah, 2024. So I do remember a lot of these trades here. This is a great one too. I took this as well. A lot of these trades, which is obviously a good thing. This one here looks good. A solid break-even position there. Yeah, I mean, these look great. I think the biggest thing to kind of understand here is you seem dialed in with your style, your preference, and the trades that you're taking here. And I think it's so important to just from a confidence standpoint to be able to look at this and realize like the data that you've built and how many repetitions you've had, you are going to be significantly more prepared in a live market than the people who don't backtest and don't have that subconscious confidence. Because that really is a big part of it. Is it's subconscious at the end of the day. Some people think they can take a trading plan, download it. As you guys probably know, I have my trading plan for download on my YouTube channel. And unfortunately, there's people out there who think they download it and they're profitable, and it just obviously doesn't work that way. So I'm glad that, you know, someone like you is really putting in the work, the repetitions to see it working for yourself and kind of develop your own style. 31% win rate, I wouldn't say low. 34 to 35 is definitely on the high. It's like the peak end that I would recommend striving for. I think the biggest differentiator here, though, is this 55% is really good. So despite your win rate being slightly lower, but keep in mind, still highly profitable, you're still at a really good win rate overall, which means that, yes, you might have slightly more break-evens than winners, which means a little bit of deeper drawdown periods. But overall, I still think the data looks great. 31% over the course of 1,300 trades I mean, the data I feel like speaks for itself. If there was any improvements here that I could recommend, it would be very minor to a point where it's not something that would stand out too much to me. Some of the trades I did pull up here, see if I can find an example of them. I cannot. There was like maybe one or two trades I've looked at so far that I'd be like, I would not take this because of a certain reason. But other than that, I think the vast majority of what I'm looking at here is fine and fantastic. Um, so there's nothing too much that I would say stands out. Maybe stuff like this, very minor, but my breaks of structure I like to see a little bit stronger here. We kind of barely reach below this in a bullish trend. Little things like that over time can kind of compound, but I think what I would recommend is if you're already trading with a 31% win rate over such a long period of time in repetitions, keep what's working at this pace for you. Don't go and make a drastic change. If I mention something like what I just talked about there, maybe wanting a stronger break of structure, and you find yourself getting a little bit confused or nervous or not as confident as you were in this backtesting session like this, because now in the back of your mind, you're like, well, wait a minute, JB said it wasn't strong enough. Don't let that happen to yourself. Keep this as your baseline. You're at a 31% win rate here. What you did here is perfect. And then in the long run, you're naturally going to find an increase in your win rate. The more you trade, the more you practice. It's just a natural occurrence. And that's something that I would not stress too hard about, trying to drag your win rate up to this arbitrary number of 34% when what you're seeing here is pretty good. So this is an example. I would not have taken this trade because the break of structure here is very unclear. We have kind of a sideways range. If we broke the overall low, maybe, because I can kind of see if we were in a bearish trend, consolidated for a while, and then failed to break lower, we can expect a market shift. But just overall, these little minute details are stuff that I notice on very few trades as I'm scrolling through. So I wouldn't be too hard on yourself about it. Similar stuff like this, like these types of trades look solid to me. A lot of equal highs here, maybe. Like there's little nuances that I think over time your brain's gonna start kind of being like, okay, this doesn't work as well, this doesn't work as well, but it's nothing that I would actively try to combat when you have a great set of data here. Keep looking through some of these, see if there's anything that stands out to me. Yeah, like stuff like this, for example, when there's not really a clear break of structure or a range that we're working with, these are the ones that I would personally avoid because, is this your break of structure way down here? Is this your break? Or maybe even this is your break. But overall, we're kind of seeing newer ranges form and a lot of missed trades and a very big bullish move here, but not really a clear trading range to work with. These types of setups I would be avoiding. But other than that, I mean, the rest of this looks really good. There's nothing that that I think could hurt this data. I don't want to say anything that you allow yourself to bring confusion into the markets, because I think overall this looks fantastic, and especially the edge. 34%, like I said, it's a very arbitrary number. It's something that, yes, you can strive for, but if you find yourself actually working backwards by taking less trades and less repetitions, it can hurt your data just as much. Because at the end of the day, the overall best statistic is going to be repetitions and number of trades, and then win rate is kind of secondary to that. So this is a good example. Like, we're very bullish here overall, in kind of going that first scenario that shows some sort of counter position, jumping right on that. I sometimes don't do. I prefer to kind of stay on the side of what I see the market's doing, like this one. You can see we're kind of moving upward, higher highs, higher lows, and just very cleanly jump in on an already trending and already bullish market here. Just helps a little bit for me. That's why a lot of the trades this week, let's see, a good example of some here. Like this one, I can look at this chart, see we're very bullish, want to hop in a bullish position here. Obviously, I said I'm not setting orders this week, but Euro Chef is one that people mentioned they took a winning trade on, which is kind of also another scenario where I would consider this an odd, tough range to navigate, but winning trade is a winning trade regardless. But if I'm kind of nervous about where price is going and sideways, I'll stay out of it. Something very, subconscious kind of, but something that I just over time have gotten more comfortable doing is just staying out of ranging markets. And that little detail is something that probably could help bring my win rate up a few points over the long term, as long as it's not hurting my repetitions too much. So this type of stuff, for example, we see prices kind of heavily bearish, and you're almost taking It's almost like instead of focusing on breaks of structure and ranges, you're focusing on momentum, which is a good thing, but it needs to be paired with those breaks of structure and ranges. So, yes, this is a very high volume bullish leg, but there's not really structure being broken here. You could maybe argue that this is a trading range, and even then the break is kind of weak. We have like this overall bearish trend going on. These little minute details is stuff that I would personally avoid, because there's not really a range here. It's more of just a very strong leg of price action, but you're kind of neglecting the trend and the kind of structures that are forming here. These types of setups are obviously in the longer term going to be a little less probable, but minor details like that in the long over the course of 1,300 trades become negligible. I think the biggest thing to understand too is with a 31% win rate, you can smoke prop firm evaluations at your leisure, especially using a strategy like Sven's even mentioned, splitting up trades or using different accounts and stuff. So I wouldn't be too hard on yourself about, 3 percentiles in a win rate, for example. I just don't think it's something too significant with data like this. Yeah, that's a big piece of it. Becoming number one, becoming more confident and becoming emotionless, as you say, is huge. And that's honestly the reason we recommend and push back testing so hard. And this is also the reason why I tread lightly when I look at a very great set of data like this, 31% win rate, lots of great trades, a consistent equity curve. I'm careful about what I say because my biggest thing is I would not want to take that confidence away from you. For example, if I start saying, oh, you're not taking trades with good enough ranges. If that now sits in the back of your mind before you go and take trades in a live market, you have, oh, wait, but JB told me something about ranges in that live session once. I don't want to be the person to take away the confidence when your data already looks great. You know what I mean? There's little details here and there that maybe trades I wouldn't take, but in the long run, you could see and be confident that you have this ridiculously good data over a long period of time, so it's nothing to worry about. Like these trades. I would take this trade 300 out of 300 times it shows up in a live market, but you could see it loses here. That's the type of confidence you need, is to not look at this trade and go, well, JB talked about ranges, maybe it's a little bit weird, or should I have canceled it because price kept climbing, and all that stuff coming into your brain. And for those of you that are watching this and realize, hey, maybe I do that too, that is all psychology and it is all stuff that needs to be pushed aside. And really the only way to do so is something like this. 1,300 trades is how you push past that confidence and can confidently say, yes, I would take that trade every single time it shows up. And even for me, I've been trading this strategy for a long time now. I've seen my setups that I like to take. If they lose, I'm very confident and I can, take a loss to the chin and just be like, all right, I'll take it again next time. Same exact setup. Because it's stuff like this that there's really nothing wrong with this setup at all. Looks fantastic to me. Sweep, break, fair value gap. And they lose. That's just how the markets are. It's all comes down to that probability we talked about. So having that like unwavering confidence is really what's key here. Yeah, I don't see too much else. I mean, I've been just looking through some of the images to get an idea of the overall. Obviously, share some with the people that are in the call. But is there any specific questions you had other than maybe I know you talked a little bit about win rate. I think naturally you're going to find that increases with time and experience. But is there any questions specifically regarding the data that you're thinking about, or any like questions in your next steps even? Yeah, this equity curve looks fantastic. I mean, this over the long run, I talk about it a lot. The line of best fit is a common. I don't know how to do it on. Where is my shapes line? You take a line here and draw it to your profitable point here. You could see this. It's called slope. You take the angle of the line essentially, and you could see it's consistently profitable at a great. There's periods where this is actually kind of what an EMA is, estimated moving average, except that's a little different because it's moving with the data points. But in general, you're seeing you have these great periods where you're highly above the average. You might get in those psychology, the euphoric state where this is going too well. Then, of course, it kind of brings you back down to that general area, that general average. You have another great period here, brings you back to that general average, even a little bit under here in those deeper drawdown, not necessarily drawdown, but periods where you're underperforming. But the general idea is understanding that you have an average here, and this average is showing you your general profit over time. And there's going to be times where you're definitely doing a lot worse than that. You could see periods like this. And then very quickly, right at the end here, you have a really good period bringing you back up to that general average. This is kind of how trading is. You will never see a trader with an equity curve that looks like a straight line. You're going to see them continue to oscillate around their average returns as price goes on and on. And it's just kind of the expected, I guess, variability in trading when, especially working with something so probability based. But yeah, this looks fantastic to me. There's nothing much else I have to say about this data. Great returns over the period of time that it is. Great repetitions here as well. In 4 years, I think 1,300 trades is a high amount of repetitions, which leads to that higher percent gain overall. But yeah, this looks great. Did you risk, looks like 0.5% per position, or yeah, looks like, yeah, which even that's even better. If this is a risk and reward scenario, you're looking at like 185% risk to reward, if I'm correct about that 0.5%, which is even crazier. I mean, that's fantastic, fantastic results. So yeah, I mean, there's nothing much that I could say about this. I think overall this is ridiculously good data. It's kind of a similar scenario to me where I have lower risk of reward. I tend to take less repetitions. I don't always trade every single week. Like as I mentioned, I'm going away next weekend. But yeah, with 1% risk being at 180% return in 4 years, averaging, what is that, 45% a year, absolutely fantastic returns. That's, one thing that I talk about a lot is the S&P 500 is a benchmark, 8 to 12% a year. A lot of large scale hedge funds will attempt to be around that range of 8 to 12%. A lot of personal traders I've spoken with on a professional level, about 32 to 36% is a standard target for a lot of them, which is, just about that 2 to 3% a month that we talk about. And I mean, you're killing it here with 45% in a year. I can't even do the math in my head right now, but what is that? That's like probably a little under 4%, maybe 3.75% per month, which is fantastic average returns. So yeah, this looks great to me, man. I mean, there's really nothing much I would say. I hope, me going over this and not having to dive too deep in your trades gives you more confidence too. Rather than me sitting here and ripping apart trades or anything, I'd rather look at this and be like, this looks great. And hopefully you can go and take this and kind of bring it to a live market with that confidence. Cause yeah, this is awesome returns. So nothing I would change about this, especially those repetitions I talked about. Because like I said, the reason you're getting such high returns, 45% a year, is because you're really comfortable focusing on those repetitions. Yes, you're going to have deeper drawdown periods. The win rate might be slightly lower than, you intend for with that 34% versus 31 like we talked about, but the repetitions is what is going to keep you in this column very, very high. The overall returns is very dependent on this number, not so much this number. All right. What time is it here? 12:49. We could probably, if there's any questions you guys have before I wrap it up here, or I might end it pretty soon. Anything you guys want to see? Any questions you might have? Because yeah, we're getting down to the end here. Gonna keep an eye on this trade. Exactly. Repetitions over win rate. It's one of the, like, just from a data standpoint overall, it is by far your best, your best statistic. The more repetitions you get, the higher returns you're going to get overall, and the win rate doesn't really even matter about that. Someone could have that 34% win rate that you're looking for, but they might only have, call it 500 trades instead of 1,300 in that same period of time, and you're going to outpace them in returns because of that. Part of the reason I risk 2% on my account is because I have lower repetitions from not trading as often, or lower repetitions from even just not taking a lot of those very, very small ranges. So I kind of combat that by increasing my risk. So that's really all it comes down to, is those repetitions over win rate. If I see someone with 1,300 repetitions in 4 years, I understand that they're going to perform and generate far more capital in the longer term than someone who has that 34% win rate but way less repetitions. So this looks great to me. All right. Anything else? Let me just make sure I have. Someone just said in main chat, 25% tariff on Apple and 50% on the EU. That's crazy. 25%. Even 50% on Apple is crazy. Any setups you guys are looking at right now? I obviously am not going to be placing them because I'm going away next week. Even this one, I'm kind of contemplating holding it through next week. I don't want to have my PC on, so my EA isn't going to be able to manage it for me. So hopefully, uh, actually, I probably don't see it being very likely. But before market close today, if we can get up to a risk-free level, if not, I might even close out the position before vacation. Um, let's see here. Someone in chat said, yeah, EG and GA. We'll check those out. GA looks good to me. That buy position there. And then we have EG here. I hate that I no longer have the colors next to my thing. It used to be so much more organized. Where is EG? Do I have it? Or am I? You guys are seeing it and I'm not right now. Oh, geez. Yeah, maybe I don't have it, which is really weird. I probably accidentally deleted it and never realized. Let's see. Forex.com. Yeah, I did. I deleted it without realizing. That's weird. Yeah, it's a clear sell position too. I'm on G Chef. He said I was asleep once it reached BE, so managed to stay in. Check that one out too, because I don't have it. Found Chef. Man, this is so much worse. I might just upgrade back to the other version simply for. Oh, I see what you're saying. We got the short position here. Break even on that. Some good volume too right away. But yeah, EG, these all look pretty good. GA especially, or EG I like a lot. This is a trade I would take every single time. If I was trading next week, I'd set this order. G Chef, same thing, and GA, they all look pretty good to me. GA is one of those more aggressive ones too. I don't take these as often. If I see them, I will. My issue is sometimes they're so quick and in my time zone because I only hop on once a day. I don't get to see the full setup occur. But this one, obviously, I'm seeing it right now, so it's not a bad scenario here. Yeah, sometimes overnight, a lot of these very small ranges I'll get tapped into before I even get to register that all the rules were met. EA, let's see. Euro AUD. Oh, it's up here. That's why. Oh, yep. Good long position here. I just took this loss, but I'll remove that so you can see what I'm marking up here. Yeah, that's a great long position too. I like the sweep here. I like the volume, the break of structure. This looks good. Has a lot of good setups. I'll keep these marked up too. And I'll actually drag some of them up top here so I can at least see how they pan out next week. I'm not going to be placing them, so I'll probably forget because they won't be in my journal. Yeah, a lot of these look really good. What do you think about this effects? What do you think about the effects of the tariff? Well, it's kind of tough to say. I think overall, kind of what's going on here is he's attempting to get into a trade deal and a negotiation. And what that does is it kind of helps both sides if that's the case. So in 2020, he did the same exact thing with tariffs. He attempted to impose a tariff, and then China came and negotiated and actually settled, and it ended with better trade relations for us and China and an overall win-win. I think the issue that's going on here is that's not happening this time. It's almost like a threat at the end of the day, which, I'm not going to agree or disagree with any decisions. But I think overall, it's something that in 10 years from now could or call it 5 years from now could significantly help the stock market and the overall growth of our economy. But in order for something like that to happen, you have to go through these kind of rough periods. And to be able to have the ups, you need the downs. And I think that's kind of what we're seeing short term is maybe some short-term market volatility, some bearish movement and price action, but I think long-term overall, we're going to see a longer-term effect on the markets in our economy. So I think from a long-term perspective, it's not a bad idea. I can see the motive behind it. But yeah, it is just a crazy scenario overall that's going on right now, especially with how many new ones are coming out each day. Like 25% tariff on Apple and 50% on the EU is crazy. But yeah, I mean, any other questions you guys have for me? I probably got to wrap it up here pretty soon. Got some stuff to do at 1. Yeah, all right. that's all then. I will end the session here. I should have it posted usually within 5 minutes. I'm pretty quick with posting them. And then I'll send you guys the link, obviously, in the live sessions channel. And I'll see you guys next week. Yep, no problem. Thank you guys for tuning in. See you.